afternoon, everyone, and welcome to Stock Market Today. It's Coram and Ed Carson here with a look at the action in today's session and how the week unfolded, where we saw a positive note to end the weekend.
Yeah, it was really nice action late in the week, so we'll have to see how things go. I do want to take a look at a few stocks: Shockwave, United Health, and Northrop Grumman. No, actually, Enphase. I want to look at Enphase instead of United Health. I'm a little bit. There's a lot of stocks I want to look at, but those three I want to look at: Shockwave, Enphase, and Northrop.
Great. Well, the medical sector, no doubt, has a lot of names in it, and UNH among the interesting charts there. But I digress. Let's take a look at the major indexes today. Strong gains across the board here. The Nasdaq up 3.3%, the S&P 500 up 3.1%, the Dow up 2.7%, the Russell 2000 up 2.8%, and the Nasdaq here retaking a key technical level on the chart. The question now is, will it stick?
Yeah, so this was nice because yesterday, it was a decent rally on the Nasdaq, not so much on the other indexes, and there was definitely some weaknesses in commodities. This was a much broader advance, a stronger advance, even on the Nasdaq, much better than even what we're showing right here. So that's a positive. Not sure if the S&P and Dow got above their 21-day lines because it really raced in the last few minutes. I think a big question, so we probably may have passed up. I mean, we'll go right there. Again, we have a lot of resistance levels. There's the 50-day line. There's the early June highs. So it isn't, maybe there's a hope that, we can get a tradable rally up to the 50-day line, but then you just don't know what happens there. Something we're going to be looking at today was the rebalancing of the Russell 2000, and that can mean a lot of volume rushing into the market right at the end. So it's not clear because yesterday we almost had a fall through day on the Nasdaq, but the volume was fractionally lower. So it's, if nothing else, it's definitely encouraging and something that investors definitely want to take note of here.
Yeah, and yesterday, even if it technically met the criteria, it didn't meet a decisive look or one that really visually showed power behind it.
Yeah, it was like you could almost really, it didn't really stand out on the chart. It wasn't the biggest gain of the week, it wasn't the beginning. You can see all these down weeks. This was a bigger move, especially in the context of this week, and seeing all that other action was really nice. So encouraging. We've seen encouraging moves before that get stomped down quickly. So
right.
So if people tiptoe in, be ready to rush back out.
Yes. Very good point there, Ed. Okay, let's also take a look at the 10-year Treasury yield, which we saw come in a fair amount this week. It did move back up on Friday, but where does this leave us if we are still in this rising rate environment? How long can a market rally really last?
Yeah, that's the concern. I mean, one reason why it's this weird thing is we started selling off in recession fears earlier this week, but then the yields came down. So the stocks that helped give stocks a reason to rally. But if you start worrying less about recession, then the yields will rise. And it just sort of, it's one of these things. It does feel like there's these roadblocks and you're trying to go down like the speed bumps. You're trying to go down the road and there's these speed bumps. So that's definitely a concern because the last time we pulled back, sort of like in late May and stuff, we sort of had this issue, and then we stalled as soon as the yield started coming back up. So definitely something to watch. Makes it difficult to see sustained rallies right now.
But we're going to keep an eye on things on a daily basis and remain flexible at any scenario that we are presented with. And let's take a look underneath the surface because you mentioned it was a broader move that we saw on Friday. So we saw areas like metals and mining stocks on the move, up 5.3% on Friday after getting hit earlier in the week, but coming off of lows quite a bit, as you can see on the weekly chart here, Ed.
Yeah, so I mean, it was nice they shaved the losses quite a bit. It's been really harsh selling for this sector. Again, this really reflects that slowing economic growth, recession fears, and yeah, nice bounce today, but it was definitely a relief rally for now. But good to see that after some really, really intense selling.
Well, it looked like the energy sector didn't get quite the same kind of bounce, down at 2.6% for the week, up 1.3% on Friday. So continuing to come down.
Yeah, this one hasn't completely broken apart in the sense like, there's a lot of damaged charts, but there are some charts out there that you could imagine if you had some strength, it wouldn't take that much to get some of these names up. But that was really fierce selling the prior week, and then to come down again. Stocks and oil, I think, is on track for its first down month in, I don't know, quite a long time. And that is, there's not much you can do to weigh on that situation, to overcome that. Again, commodities are struggling, and this was the one sector that was doing well, and that's something to keep in mind, is that something can look strong and then suddenly fall apart.
Yeah, and I think it'll be interesting to see how the broader sector handles this 40-week line. It's an area in the past where briefly dipped below it here last August, but all in all, that's been a longer-term support level for this sector since getting back above it in late 2020. So will it find support there? Will it slice right through it? That might be an interesting level to watch.
Yeah, and then by also if we get down there, that's also where oil is around $100. You could imagine, because it's around it's somewhere about $5 above that, and so there's some key levels on a lot of different measures on energy.
Okay, so something that we are watching, and also this was the area that saw the biggest move in the market, Ed, and that is the speculative growth stocks. Here's a look at ARKK on the weekly chart, and up about 18% this week, closing above the 10-week line. It was able to do that back in April, but that was short-lived.
It was short-lived, and we'll see. Look, there was a lot of things in ARK and not ARK. The speculative growth or growth names really did well. I mean, they really benefit from the lower yields, and so that's a positive. Nice to see this. And look, we've mentioned before ARK and some other names, Tesla, Google, ServiceNow. They didn't undercut their May low, so that was a little sign of strength. And Tesla had a big week. Google had a big week. So there was a lot of strength there. Google actually got above its 10-week line as well, 50-day line. But we'll just have to see. Look, if yields come back up, if the market turns, these volatile names are likely to see big losses because, you can see it got above that 50-day line, 10-week line in April, but boy, did it sell off from there, losing about half its value in just a few weeks. So you just have to be careful with something like this.
Right. But nonetheless, some shifts underneath the surface that we are seeing, and so whether or not they are short-lived or more sustained is yet to be seen. But that's why it's important to keep tabs on the market each and every day, and look at that week-by-week analysis as well. And next on our list, Ed, let's go ahead and take a look at Shockwave Medical, SWAV. This is one that we covered on IBD Live this morning. A strong week for this stock, up about 25%. Came down in heavy volume in the week prior, but that was a blue day on the daily chart. But it's getting close to the round number at 200, and arguably a breakout today.
Yeah, and volume came in very late. I mean, that could be some of that Russell 2000 last minute because it was not looking strong for most of the day. So that's a positive because most of this run, this 25% run this week, mostly was on light volume, was light volume. So look, there's a sort of you can look and see a wild base, not so much that one because I don't even know how you can have that. Not sure what that is, but there's that trend line that's coming up. There is sort of a base from April to now that you could argue is there as sort of a base. Again, this is a very aggressive entry. This is a very expensive stock, but it has tremendous growth. And I was just trying to this is just, we've seen some drug makers come up. We've seen some health insurers come up, and it is expanding out. There are some product makers. Definitely a lot of caveats with this one, but this is definitely one of those risk-reward type of situations.
Yeah, this is more of a growthy name in the medical sector with that strong triple-digit top and bottom line growth. And so, to see the technical strength, at least in the near term, coupled with the fundamentals that we typically expect for big can slim winners, is something notable. So
Yeah, 5 quarters of triple-digit sales growth. It's increasingly profitable. Looks like it's going to clearly be profitable for the first time this year. So yeah, a lot of things to like, but it is a wild one, and there's no question about that.
Yeah, we'll keep an eye on it. And with the strong move this week, I mean, up what, 25% we said. If you didn't take the aggressive entry today, it seems like the next thing you would want to see is for it to tighten up here, at least form some sort of shelf, if not a new base entirely.
That would be ideal.
Okay, let's see. Next on our list, get your sunglasses out, because we're looking at Inphase Energy, a solar name, where this week for it traded relatively tightly.
I mean, it's so hard because this one moves so much during the day, every day. Even when it closes flat, it seems to swing, have pretty big intraday moves. So this is another wild one. And, we go over a lot of different things. The old 193 buy point isn't really valid, though it's as it came down. But it's clearly finding support around that level. There is sort of a downward sloping trend line that you could do off of this handle. The handle buy point is 217.33. The problem is that you buy it if it goes up, jumps up 10%. Well, it could easily reverse that next time. So with a stock like this, you might want to be looking about how can you find an early entry and maybe start a small position, then maybe add to it, because it's going to swing a lot. You can see, wow, look at these big gains, but you can see those big losses right away as well. The solar group is doing well, but you can see there's a lot of ups and downs on a daily, weekly, and probably a monthly basis with this.
Yeah, it hasn't had a sustained move to the upside, at least out of a proper base, in quite a while here. And even the last successful breakout was all in all short-lived and round-tripped completely. So this isn't one that you can just say, hey, it's at a buy point, now I'm going to set it and forget it, especially in these conditions.
No, not in these conditions. So yeah, it's definitely one for more aggressive traders, and you just have to know what you're getting into.
Exactly. Well, let's also talk about a Northrop Grumman. NOC is the ticker there. It's trading tightly right around its 50-day line. Tried to poke above a cup with handle base in early June. It's pulled back since, but finding support where you'd like to see.
Yeah, this was a little bit, this was held up pretty well. The breakout failed, but almost everything fell apart, at that point. The relative strength line really didn't take much of a hit during that reversal. So it's strong action in that regard. This is a slower grower, slower mover than the other two names we looked at for sure. And we haven't looked at Northrop as much lately. So I just thought to make sure that when people are building their watch list, they should make sure that they don't get fixated on, just the medicals or just this. Or I think a strong move off the 50-day, 10-week line could provide an early entry. And while technically the old buy point isn't valid, there's a lot of trading there around, I think, the 427 level, or what is it? 477 level. That's right. And so those are areas where you can do it. It might be building a new consolidation. This is one that I think that is still showing some strength. This is on leaderboard and really hasn't, if you bought it in February, it didn't give you real strong reasons to get out. During this time.
Any thoughts on the fundamentals on this one? And another thing that we've also talked about is that, I guess, sort of geopolitical headline risk with something like this.
There's geopolitical headline risk, but also the idea is thought is a reward. Obviously, it jumped around the Ukraine war. I think the thought is that Northrop might be one of the bigger winners from defense budget rising around the world. It just seems likely that there's going to be Europe and Asia and the U.S. going to see higher defense spending and higher defense spending on equipment as well. So that should benefit Northrop. And this seems to be the leader in that defense group. And given that a lot of the aerospace names, or the civilian aerospace names, are pretty terrible, the fact that the aerospace defense group is 22 is pretty impressive out of 197. So the fundamentals, hope that they might come up a little bit more. There is some small dividend. So have to see that. It's
Mhm.
there definitely a spectrum of stocks that we're looking at today.
Yeah, definitely. Well, that makes sense, Ed. Thank you so much. Now, we are seeing a shift in the market. So, what should investors be doing now?
Well, I mean, you can be looking to tiptoe in, perhaps if you want to, assuming that we have a fall through day soon or not. But I think the key is that do it definitely the tiptoe. And if you're not finding individual stocks, there's not that many stocks to buy that are set in buy range. You can buy like a broad market ETF, get some exposure that way. That's also a good way to play those beaten down growth stocks. Some of the beaten down names, some of the big winners that have been rallying, but if you don't really, those are risky. But if that's what's moving, that's one, the broad market ETF is one way to do that in a relatively safe way. Still, if we sell off like we did in early June, even safe broad market is going to come down hard. So build up your
Right.
watch list, start
Mm-hmm.
slow, and be ready to get out quickly.
Right, because it doesn't seem like there's been a fundamental shift in the macro picture, right, Ed? So we've got to be open to all scenarios. Listen to the day by day technicals, but at the same time, be open to the potential scenario that we have outlined previously, which is uh, coming down for more of a third leg, that in bear markets that follow through days have uh, somewhat of a chance to fail. This is, even if we are seeing a step in the right direction, as you said, that's not a signal to rush in by any means, and that
Yeah.
it's all clear.
Yeah, and we don't know. It's like we ultimately look. I mean, we talk about the macroeconomics, and I try to do that as a news editor. Look at these things, but you want to eventually pay attention. What does the market think of this? And if the market wants to rally powerfully, you have to pay attention to that.
Yeah.
If it goes down lower, and it could be that we go sideways, which would not be a bad thing because then we could get some more bases. So you have to take it as it comes. You want to pay attention to the news and know what's out there, but look at what the market's doing. Some positive action this week. Still, there's reasons to be skeptical about individual stocks and the market, but it's still we had a step in the right direction for sure.
Right. We got to have our yoga Gumby mindset of staying flexible to all scenarios. All right. Thank you, Ed. Thanks everyone for watching. Coming up at 5 p.m. Eastern, join me over on my YouTube channel for Stock Tales, where multimedia reporter Alexis Garcia will join me. We'll learn a little bit more about her background as an athlete in college and how that is contributing to how she is dealing with mental toughness when it comes to trading. I mean, we've all dealt with trading FOMO, still dealing with it, especially, on a week like this week where you see ARKK up, almost 20%. Well,
Mm-hmm.
we are going to be talking about FOMO. So we hope you join us over on my YouTube channel. So check out my Twitter feed at Alissa Coram for the link to that. It'll be a good discussion, Ed. Hope you have a great weekend.
You too.
All right. Thanks, everyone. We'll see you back here next week.